Bill here with the Metals Minute. Today is Wednesday, October 12th, 2022. Well, the big numbers out today are with the Producer Price Index, the PPI, and those numbers are higher than expected. They came in year over year at 8.5%, and 8.4 was expected. Although it's lower than the previous month of 8.7, it's still a significant number and higher than what they thought might be coming in. Month over month, it's double what they expected. At 0.4% in 1 month's time, they were expecting 0.2, and that's a lot for a month. And so that appears to be indicating that inflation is continuing, or I should say again, is rising higher than what they expected. The previous month, that was a negative number. It was a minus 0.1, and they just revised it lower to minus 0.2. So that indicates that a lot has happened just in the past month. Now the core numbers are more in line with what they expected, and even just a little lower year to year at 7.2%. But month over month, that 0.3 is right in line with what they expected for the core PPI. Now again, core means they take out food and energy costs, and they call that the core number. But the question is, who exists without energy and food? Those are two of the main expenses that American families deal with. And for example, produce, vegetables and fruit, is up 15.7% year over year. So that's a significant source of inflation, and those numbers are continuing to rise according to today's numbers released. Now tomorrow we have the CPI, and that's a more closely watched number. It's more widely reported. PPI is reported in the business arena, and of course it's reported some, but CPI is the number that many things are based on, such as the cost of living allowances for retirees. That will all be announced tomorrow. So we'll have another article coming out that will include all of that data for you. Will be coming out shortly, and that'll be released tomorrow morning. But in any event, we see inflation beginning to step back up. We also have the war concerns going on, and we hope that that doesn't go further than what it already has, but that's, they don't ask us about what to do there, so we can just keep everyone in our prayers that they'll make good decisions around the world, including here in the United States, and how we can best facilitate a peaceful ending to this situation, because that's feeding into a lot of things that are going on right now. The bond markets are really having a difficult time. The Japan government bonds haven't traded. This is the 4th day. Hopefully they'll get some resolution there. We see the gilts are the British government bonds have lost a lot of value in the last year and a half or so. They're down nearly half in value, and that impacts a lot of the pension funds, and they are trying to create a resolution this week by Friday. Not sure that they're going to get that accomplished. Word is that the Bank of England has quietly been making promises to the pension those that manage the pensions, that they will try to work with them a little longer, even though the headlines say they only have until Friday. So hopefully that will be resolved well soon. We're also at a situation here in the United States where the Federal Reserve has assets and liabilities, and right now the expense on the liabilities is slightly exceeding the interest that's coming in from the assets. So that won't be able to continue for very long, but we'll see what kind of resolution they have there. in any regard, when we look at the charts of gold, and all the numbers for the metals are in the write-up, but in the technical charts for gold, we see a setup happening, just kind of a pattern where it goes through a period of coming up and then a consolidation and then the next leg up. And we appear to be right at the consolidation point where it's preparing to go its next leg up. And so we watch that with anticipation. Year to date, if we take a composite of all the metals, gold, silver, platinum, and palladium, they're down 2% for the year. So compared to all the other assets out there, that's a source of relative stability. And so that's one reason we like the metals. In times like this, yes, there are down days, there are down months, but the relative amount is very stable when we compare it to stocks and bonds and even real estate, and much of the crypto space is also underwater by a significant amount year to date. So hang on tight. I believe rough waters are ahead for all of us based on what's going on in the world. But it's comforting to know that the most dense of precious metals are a source of stability and buoyancy, if you will, while all things are topsy-turvy. And the numbers prove that out. And I don't believe we've seen the growth yet that we're going to see over the course of the next couple years. It will be a good time to have been a precious metals owner. So I encourage you to hang tight even in days where we see downward pressure as people try to they sell what they can so they can keep other parts of their portfolios and lives solvent. And but precious metals has this pattern where it reacts in the exact way that we're seeing it do so now, but we know that much brighter days are ahead for the metals, and it won't be long to wait. So thanks for tuning in. We'll see you again later this week.